Ever wonder how startups get their start? Today, we are breaking down what an angel investor is and how they help new businesses grow. An angel investor is an individual who provides capital to a startup business, usually in exchange for ownership equity in the company. These investors typically write checks ranging from $25,000 to $100,000 to help a company reach its next major milestone. Beyond just the money, angels often provide mentorship, industry connections, and strategic guidance to help the startup survive its early years. It is important to distinguish between an individual angel and a venture capital firm, which manages money for other institutional investors. Investing in startups is extremely risky. Most angel-backed companies fail, meaning investors rely on a few big successes to offset the losses. Because of the high failure rate, experienced angels follow a strict rule: never put more money into a startup than you can lose. Angel investing is a high-stakes way to support innovation. Thanks for watching, and remember to do your own research before making financial decisions.